If you have ever wondered how some people seem to be making money effortlessly in the crypto world, platforms like Aave make it possible for anyone, regardless of their starting balance, to earn income in DeFi. In this guide, we will cover the basics of lending and borrowing the crypto and how to do it safely. Let's jump right in. Lending in crypto is similar to traditional saving accounts where you deposit money to earn interest. Instead of cash, you deposit your cryptocurrency to earn interest. Platforms like Aave allow you to earn interest by lending your assets to borrowers. The rates can often be much higher than what you would get from a traditional bank, making it an attractive option for many. But hey, if you're still depositing your money in a bank, I'd love to hear why. Is your bank sending you love letters, or are they just taking your deposits for a joyride? Drop your thoughts in the comments below. Key terms to know. Health factor. This tracks the safety of your loan. A higher health factor means your loan is safer, while a lower health factor suggests more risk, especially if the value of your collateral drops. Loan to value, LTV ratio. This shows how much you're borrowing relative to the amount of crypto you have provided as collateral. The higher the LTV, the more risky your loan becomes. The APY, annual percentage yield, on platforms like Aave can fluctuate. For example, it might rise from around 5% to as high as 18%, which can catch the attention of those looking to earn. When considering lending at higher APYs, it's important to evaluate the risk carefully. The right strategy, along with safety measures, can help manage the risk effectively. Managing risk is an essential part of successful lending in DeFi. A core strategy to reduce risk is using tight ranges. This means carefully managing how much you borrow and how much collateral you provide. By doing so, you ensure that your collateral is enough to cover the loan in case the value of the collateral fluctuates. This helps minimize the chance of liquidation, which occurs when the value of your collateral drops too far below the loan amount. It's also important to note that borrowing can be strategically used to generate greater returns than the cost of the loan itself. For example, if you borrow funds at a 5% or 10% interest rate and then deploy that borrowed money into high-yield investment opportunities that offer returns like 300%, you're leveraging the borrowed funds to earn significantly higher returns. By doing this, the math works in your favor and the cost of borrowing is overweighted by the profits you make from those high-yield investments. However, it's crucial to monitor your loan-to-value ratio closely to ensure that you don't expose yourself to unnecessary risk. Over-leveraging your position can lead to liquidation, so it's important to remain cautious. When it comes to lending and borrowing crypto, Aave stands out as one of the most well-known and trusted platforms. It's popular for its large variety of supported assets and its ability to provide high levels of liquidity, meaning users can easily deposit and borrow funds. Aave also holds one of the highest total value locked TVL across DeFi platforms, making it a go-to choice for many. However, there are other platforms worth exploring. Compound and Venus are also solid options with competitive yields on various assets, including stablecoins and major cryptocurrencies. Moonwell, another platform on Ethereum and Binance Smart Chain, offers exceptional returns, with USDC currently yielding as high as 19%. The greater thing about DeFi is the variety of platforms available, each offering slightly different features, risk levels, and yields. Exploring multiple platforms can give you more options and help you diversify your portfolio for better returns while managing risk. By the way, if you're enjoying this video, don't forget to hit that like button, because if you're not liking, are you even lending? Give it a try and let me know what you think in the comments. Understanding the psychology of borrowing and lending is crucial for maximizing returns in DeFi. Many people feel hesitant when it comes to borrowing at rates of 5 or 10%. However, when they see lending opportunities offering yields of 18%, they often don't hesitate to jump in. This psychological bias can skew perceptions about borrowing. The key is to realize that the cost of borrowing is often outweighed by the returns returns from lending or investing borrowed assets into high-yield opportunities. When borrowing funds to make additional investments, the cost of borrowing becomes a small percentage of the overall returns. As long as you manage your risks appropriately and don't over-leverage your position, borrowing can be a powerful tool for amplifying your returns. A major misconception that many newcomers to DeFi have is that they need a significant amount of capital to succeed. Some may believe that only those with large sums of money can participate in and profit from DeFi. However, strategy is far more important than the amount of money you have to start with. Whether you are working with a few $100s to several thousands, the basic principles of DeFi remain the same. In conclusion, success in DeFi isn't about how much money you start with. It's about how well you understand the strategy, manage risk, and adapt to the ever-evolving market. Whether you're just starting out with a small amount or already have some experience, focus on learning, applying smart strategies, and staying patient. Over time, even small investments can yield impressive results. Keep refining your approach, and the possibilities in DeFi are endless. So, happy investing!